Hello, bro. How's everyone doing? Hope everyone's having a nice weekend. So recently, a friend of mine has been posting, instead of weekly reviews or outlooks or end of week results, he's been posting just his data, how he's collected his trades throughout a specific week, and he's just been reviewing them. And I thought that was a great idea, not only for myself, but also for anyone who wants to pick up on a couple of things if they're deciding to use me as a educational source. So what we're going to be doing is we're going to be reviewing the week of Monday, 22 September 2025. This week I took three trades. It was supposed to be four. Um, Fortunately, the trade on the 25th, which was a winning trade, we'll get into that later. It was missed, and my limit order was not filled, but we will focus on the trades that were taken. So this is a 50K account, and I'm risking 1%. So I was down 2% on these days. So that's around $1,000. Then on Friday, I made um, 2 point basically 5%, 2.5% made Friday, while I lost 1% on Wednesday, and I lost 1% on Tuesday. Just a brief overview of what these trades really were. This trade, um, actually, I think it's a better idea if we just go straight into that. So here is this losing trade, and this day we had FOMC, so I took the trade after Powell's speech. Or sorry, we didn't have FOMC. We had the Powell speech at pretty sure I think 12:35 or 12:45, one of those. But the main idea was my model one long filter was provided as we ran beneath pre-market sell side. And keep in mind, I was anticipating that this day would continue higher. I didn't really have it in mind that we would reach lower and perform an immediate rebalance on the daily. So if you would put up the daily chart, you would see that this here is a previous day low, or sorry, high, and the price ended up immediately rebalancing this level and pushing through it. What I had anticipated, or what I was looking at in the morning, is okay, we're very deeply beneath midnight and 8:30. You've taken pre-market minor sell side and also major sell side that was created in pre-market. And within that, we spent some time accumulating until we had Powell's speech, which where there was injection of volatility. That's where we had our second sweep or second sweep manipulation that ran lower and took this low. Then I went on the entry time frame and I attempted to long the creation of a breaker. So you have low, high, low, low. As we created that breaker, I longed as we were kind of trading within that discounted. And unfortunately, it lost. I was aiming to be break even this high, but we fell short. And then we just ran a stop loss, and I continued to shoot lower throughout that day. And as I said here, perfectly happy with this loss. This is just one of those days where I'm wrong about daily direction. So I was hoping that we'd move lower. I was wrong. We ended up moving higher. What can I do? Move on. Now this is the day where it's the loss wasn't supposed to happen. This wasn't my model. My model this week is supposed to be 2-1. So a win here, and a loss here. This wasn't supposed to be here. I took this out of eagerness and a bit of, emotional decision making rather than rational decision making, which is something that we're actively working on. And we can't get mad when we do it wrong once. It's not because of a bad trader. But here was the trade. This is the entry time frame. Very similar to yesterday. Pre-market sell side, we move lower. And here is where I made a mistake. So notice how this is the 1 minute time frame and how well, I guess for me, it makes sense to me when I say that a qualifying sweep, um, at least for me, is determined on the 5-minute time frame. And when we go on the 5-minute time frame, um, yeah, here. So 5-minute time frame. Notice that this low, if you were to take off the wick of this swing low or this body, then you would notice that this isn't really a Model 1 sweep. This is just a kind of continuation. So this does not qualify as what I would look for in a proper sweep. If we compare this trade to the previous trade, you will notice that the body sweep that happened, this is the 5-minute time frame, notice that the sweep happened on a bunch of accumulation lows. So this sweep, if we would take off the wicks, it's a very clear convicted body sweep. It's energetic. Notice how the body has volume. I think maybe a point that was maybe led to this loss is the accumulation that happened. You could make a case for this accumulation triggered in more sellers or buyers, and then us running beneath low took those buyers out and triggered in more sellers. So that way, both sides of the market swiped out, and now it's perfect time to long. But usually, my winning trades do not look like this. Usually, what they do is it's just a very quick convicted low, like we see here with volume. See, we run pre-market sell side, and then we form a proper swing low, not a swing low like this. Even though this is technically a swing low, it's separated from its right candle and its left candle, and it's a swing low, generally speaking. It's if you were to take off the wick, this would just be a continuation low. This is not really a sweep. I wouldn't consider this as a proper sweep. Anyway, well, what I was trying to say is that usually what my winning trades look like is we have a proper low, and then we spend some time away from it, at least 3 to 4 candles, 5-minute closes, of course, and then we have that second sweep, which we have here, and we'll get into what a more ideal one looks like on the next trade. But this trade, compared to the other one was following the model, and one wasn't, really not following the model. And this is a mistake, and not proud of this. This is a bit that I had posted talking about this trade. And what else do I want to mention about this? Yeah, so it was just, all in all, a poor trade. As you can see, we spent lots of time, moving into profit and now moving into profit, and notice it's respecting the consequent encroachment of this new day opening gap, which was Tuesday 6 p.m. open, and this is what really caused price to push lower. You can see that during the macro we had very slow price action. That's a kind of a telltale sign that makes it clear that whatever day you're trading on, if the macros aren't providing volume, then you probably should check the other indices like ES and YM and see if they're in sync. Because if they aren't in sync, then it's also a big sign that our price is going to be inefficient today. And also, one thing that I also want to know is at this time, if you were to compare the dollar index with the Nasdaq on this day at this time, you'll notice that the dollar index is also kind of sticky. It's not moving too well. It's stagnating. It's meandering around. And that causes the Nasdaq to not, move as freely. This is just something that I've picked up on, and it's just usually when a dollar index is trending or moving with volume, it's a lot easier for the Nasdaq to move to its predetermined drawn liquidity with speed and with displacement. So this was just a poor trade. Looking at the 5-minute, this is not a proper Model 1 long. This can be wiped off. That is not Model 1 long. And yeah, let's move into the winning trade of the week. And also, actually, before we do that, I want to go on my day reviews and I want to look at 25th of September 2025. Just very quickly. What I had pointed out is I wanted to see um, pre-markets. It's the same drill. Pre-market taken out, and then or whatever London, just any fractal liquidity point that is opposing to where I think price is going to be moving to. So on this day, I was thinking that price was going to move higher. I anticipated that we're going to reject off of this gap. And also this wick here, notice how it stabs into it. That's the same level, 0.25, 0.25. And notice we run pre-market wide moving into the BSC. And we form my model 2 long, which is a 1 minute entry. See, form low, high, low, low. For my high, that's a breaker. I had my limit on the breaker. Fortunately, I didn't get filled, and it went to pre-market buy side. So I can take, I can applaud myself in being able to recognize the daily draw and what price was going to do. And one thing that I did learn is that I should probably, not use limits. A smarter decision that I should have taken on this day was to market order this kind of close. But there's no point to fantasize about what trade I could have taken or what trade I could have not taken this week. And let's just focus on what happened, and we'll focus on being better the next week and the week after that. And the only way that we can do that is by accepting what happened and by moving forward and by just having code to just evade it. Now here is the winning trade of the week. This was actually my biggest trade yet in my let's say trading career. 112 points and a half. I was originally aiming for this pre-market buy side, but I'm not used to being in trades for this long. I spent a big portion of my time trading, taking very small positions. My take profit would be 15 points, 20 points, sometimes 30 at most, and very small RR. And this was a considerably big, I'd say even a huge trade. And aiming for pre-market would have just put me in a very uncomfortable position. And as you can see, price closed off the week just a point away from pre-market. So I would have not liked to be in a trade, over Sunday open. I'm glad that I closed it where I did, and it's a winning trade. I can't complain. So it's the same framework here. It's the same exact framework. What I had planned out for today was we had two conditions. Either we shoot through this BSC and we immediately rebalance the previous week's range, or we can respect this BSC and not immediately rebalance and begin to close through this wick. And in the opposing scenario, we would have used this wick to bring us lower and to immediately rebalance. But that was depending on how we would treat fractal liquidity. This goes back to I have a video posted on this, using low time frame assessment to confirm high time frame conditions. So it was kind of two scenarios where the day would possibly trade higher, touch constant of the wick, shoot lower, immediately rebalance. Or we could open, trade lower, touch the lower bound of that, fail to immediately rebalance, and then shoot higher and close above the consequent encroachment of the wick. And that's what happened, and that's what we kind of picked up on. You see, this is pre-market sell side, and also this is London, but it's not labeled. So just imagine the horizontal line going through and extending right, and that says London sell side liquidity. But you can see that we ran that sell side with a convicted move, and this definitely triggered sellers. Then as we moved higher, we placed in a low, and a high, and then a lower low, and that formed a breaker. You see price respected that breaker, and then it went up to seek higher prices. This one was a bit tricky because we had two model two longs, one that occurred on the 5 minute, which was a sweep on this low, another one which occurred on the 1 minute, which was a sweep on this low. Now the tricky part here is that the sweep on this low on the 1 minute is a qualifying sweep over the sweep on this low, because if you would take off the wicks, this run lower does not sweep the bodies here, but it does sweep the 5 minute bodies, which puts us in a kind of a tricky situation. But the breaker of all the sweeps held out properly. If you were to draw this low to this high, the breaker would have held still, and then this low to this high, the breaker held consequent approachment properly still also. So there's not really a point into getting into too much of that. But one thing that I do want to mention, and I did speak about this earlier, is that you see the dollar index it's not sticky. It's it's moving with volume, it's moving with intention, it's direction. And let's take a look at the YM right here. And the YM was in proper sync. So this is around 11 a.m. 11 a.m. You see we have the same shape. So this puts us in proper market conditions. Also, London, today's London range or Friday's London range was, it was caught up with the previous London range. So it wasn't too big, it wasn't too small. It was just average. And that played out nicely, and we got delivered to take profit. I took out 6 contracts here. I entered with 8 contracts. I took off 6 here, and then I went break even. Then final 2 at the consequent encroachment of the daily wick. Let me really quickly this level. Something else that I also want to point out is notice where the reversal came off of. Came off the 24553 even, which is there. So our trade was from here to there. So basically the whole day's move. And that's it for this week. We are up just around 0.5%. And yeah, that's gonna be it for today's weekly data review. I think this is way better than doing outlooks or doing end of week results or just trying to predict price. I think I'll continue with this for as long as I can. I'll probably make this a series once a week, every Saturday night. I'll go over my data. Thank you all for watching, and hope you all enjoy the rest of your day. And of course, be safe.